You're watching Mirror 7 News. Stay informed, stay ahead for more news.
Biotech giant CSL has made headlines after announcing some major changes to its operations. The company revealed that more than 3,000 jobs will be cut, about 15% of its global workforce, as part of what it describes as a simplification process. At the same time, CSL confirmed that its influenza vaccine business, known as Seqirus, will be spun off into a separate company. This marks a significant shift for one of Australia's largest and most influential companies, which has built its reputation on turning blood products and vaccines into global successes. The move comes at a time when CSL's profits are rising, yet the company says it is focused on restructuring in order to become leaner, more agile, and more competitive in the long run. The decision to separate Seqirus, which is already a world leader in flu vaccines, is being presented as a way to give both businesses the independence they need to grow. According to CSL, the flu arm will gain the freedom to pursue its own strategy in a dynamic vaccine market, while the remaining CSL group will continue to focus on its therapies for rare and serious diseases. Despite these ambitions, the announcement did not land smoothly with investors. CSL shares quickly slumped by around 8% after the news broke, erasing billions in market value in just a few hours. Over the past year, the company's stock has already fallen by more than 11%. And this latest move left the market uncertain about the immediate outlook. Some investors were unsettled by the vague details around the job cuts and the broader restructuring plan. Others were disappointed that, alongside these cuts, CSL also announced a large shareholder buyback program, suggesting profits are being returned to investors, while thousands of workers are being shown the door. This shakeup also rippled into the wider market. The ASX 200 opened lower, dropping by nearly 0.5% in early trade, in part due to CSL's heavy influence on the index. The timing is notable, as the benchmark had been edging close to the symbolic 9,000-point mark, a level that traders had been eyeing eagerly. Instead, the CSL news pulled sentiment down, serving as a reminder that corporate restructuring can have wide-ranging effects across the market. For employees, the uncertainty is real. More than 3,000 people worldwide now face redundancy as CSL trims back operations. For shareholders, the looming question is whether the spin-off of Seqirus will eventually deliver long-term growth and stronger returns. If the split is approved, it will be listed separately on the ASX, and current shareholders may receive a stake in the new company, though details have not yet been finalized. In short, CSL is entering a new chapter, streamlining its workforce, reshaping its business, and testing investor confidence. Whether this gamble pays off remains to be seen, but the impact is already being felt on the markets, in boardrooms, and most importantly, among its employees. Stay subscribed for more videos.